Good morning, everybody. It's Thursday, March 6th, 5:58 a.m. Central Time. Mackenzie, this is our third time taping this morning.
It
Technical
is.
difficulties and internet lag and that sort of stuff. It happens. We had one video we did that didn't have graphics, and then we lost internet on the last one. It happens. It happens. We do it early in the morning. Sometimes shit happens, Okay, grain market's a little bit higher this morning. Let's start off with tariffs, of course.
So, Canadian and Mexican auto imports will be exempt from President Trump's 25% tariffs for 1 month. The announcement, prompted by automakers' requests, caused the stock market to surge on Wednesday. The pause will apply to all auto manufacturers operating under the USMCA trade agreement. Despite the delay, the White House said Trump still plans to use tariffs to pressure Canada and Mexico to do more to stop fentanyl from entering the U.S. Last year, U.S. auto trade with Canada and Mexico accounted for approximately 22% of total trade between the nations, totaling $345 billion. The U.S. has an overall automotive trade surplus with Canada, but a trade deficit with Mexico.
I don't think you guys understand how much I hate being late. Like when we had a re-record, I was like swearing and like yelling, and I probably woke my kids up. I was about to throw the coffee cup through my computer screen. In any case, I'm sick of talking about tariffs already, and we're 3 days into the trade war. I mean, this could last for weeks or months or years. Who knows?
Yeah, lots to talk about, I guess.
So some of the risk assets rallied when this news was out yesterday. Stock market rallied back. A lot of other things kind of moved, but it's back in the tank this morning. I think you just can expect these sort of headlines to continue. One day it's broad-based across the board tariffs. One day it's now there's going to be some carve-outs, and we've got kind of more news along those lines.
Certain agricultural products may be excluded from tariffs on Canada and Mexico. On Wednesday, Ag Secretary Brooke Rollins said she is hopeful the administration will offer relief to the agricultural sector. She noted that exemptions might include potash and fertilizer, but didn't confirm any specific products, adding that all options are being considered. The news comes one day after Trump slapped 25% tariffs on Canadian and Mexican imports, along with an additional 10% tariff on China. China and Canada have already imposed retaliatory tariffs, and Mexico is expected to announce its countermeasures on Sunday.
We import a lot of potash from Canada. However, this is our friend Josh Linville on X. 90% of U.S. potash imports come from Canada. However, a large portion of those are exported from PNW ports. Portland Snake River saw 7 million tons exported in 2024. Canadian imports last year were 12.9 million. If the fight over potash flares up, the U.S. could block those export flows. That's interesting. I don't know what fertilizer's done at the retail level. If you guys have some insight into that, drop us something here in YouTube or shoot me an email to info@standardgrain.com.
President Trump's tariffs could result in export sale cancellations. About 12 million tons of U.S. crops are at risk of being canceled due to tariff driven cost increases and trade uncertainty. For the current marketing year, 306 million bushels of corn remain unshipped to Mexico. Mexico, of course, is the largest importer of U.S. corn, with purchases last year totaling $5.6 billion. Soybean sales to China could also be canceled, but the impact would be much smaller as only 58 million bushels remain unshipped. China may cancel some sales to just generate headlines or defer existing contracts to next year, hoping for a trade agreement by then.
So I think that the unshipped corn and soybean bushels are of concern. And there's two reasons why the markets have sold off. One is just general fear and uncertainty and risk off attitudes. And then the second is the fundamental fear that the balance sheets will be altered and altered drastically. We've got 306 million bushels of old crop bushels sold to Mexico that we haven't shipped. That's 44% of everything that they've bought. And they've been our largest corn buyer. With soybeans, yeah, China's already, we've already shipped most of our sales to China, but they've still got 58 million bushels unshipped. And those are the numbers that you can kind of slap a label on. But there's also new crop business, which will typically begin to accumulate in the spring or early summer. And if there's tariffs or retaliation, maybe those new crop sales are also at risk, which could be an even bigger deal. So there's a lot that remains to be seen here. But yeah, absolutely some bushels at risk.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video with Matt Bennett?
Great stuff this week. Where is the weather premium? The markets have obviously fallen sharply. We've got D's corn futures down sharply. November soybean futures down sharply. Spring wheat futures for new crop down sharply. Is there any weather premium left in the markets? And is the market getting too far ahead of itself with this sell-off? Meaning, like, have things gotten too cheap? We were doing a lot of corn export business, and we had really strong corn demand, even when the board was at $5. And now the board's we've taken 40, 50 cents off that. So what's going to happen now? Chris Barron was on Tuesday. We did some historical stuff. Is there always a chance to sell corn and soybeans at a profit throughout the marketing year? We overlaid some December corn and November soybean price charts over production cost, and the production cost was an aggregate of Chris's customer base. It's pretty interesting stuff. Paul Neiffer was on either Monday or Tuesday. Direct payments are coming. We talked about the details, who is eligible, what does it mean for your farm? A lot of it depends on how your farm is set up. Are you an LLC? Are you a partnership? Are you a corporation? A lot of it comes down to how many social security numbers you can use. If you guys want to see the premium stuff, go to standardgrain.com this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. You can do it on your phone in about 30 seconds. Give that deal a shot this morning, guys.
As tariffs deepen the ongoing economic challenges for farmers, President Trump has urged them to remain patient. In his address to Congress on Tuesday night, Trump said that his new tariffs would produce better results than the Phase 1 trade deal with China, which of course he negotiated during his first term. He emphasized the need for farmers to endure this transitional period. This year's gains in the corn and soybean markets have already dissipated due to retaliatory tariffs. Even before the tariffs were imposed, farmers were experiencing significant losses due to poor markets. However, some relief may be on the horizon as the initial portion of the $30 billion in federal farm aid is set to be distributed here in the coming weeks.
So the markets have fallen sharply, mainly on tariff concerns or fears. That would be my opinion. I think that's general consensus. It's because of the tariffs. That's why we've sold off. Corn, soybeans, and wheat combined have lost 11.2% from the February 19th high to this week's low. That's a substantial move in a very short period of time. So bear with them. I mean, it's not like you have a choice. I think that if things stay like this, if soybeans, for example, stay at $10 for new crop contracts on the board or below that, guess what? They're going to have to do MFP again. That's probably what's going to happen. Paul Neiffer is going to be on today, as a matter of fact, to discuss what happened the last time around, just as kind of a refresher, and what happened with MFP, because if this thing doesn't get fixed, I hate to say it, but that's probably where we're headed. I don't think farmers like that either. I think farmers would like to just have a better demand base and have a chance to sell at profit and stay in business that way. I don't think anybody's a huge fan of any of this stuff, but that could be the direction that we're headed.
According to Russia's chief meteorologist, the country's wheat crop is in better condition now at the end of winter than it was at the beginning. Russia's wheat crop has experienced a mild winter with warmer than usual temperatures and reduced snowfall. In early December, Russia's state weather forecasting agency reported that over 37% of the country's winter crops were either in poor condition or had yet to sprout. As a result, many analysts and consulting firms lowered their projections for Russia's wheat production and export potential.
So this is the Russian state meteorologist saying, hey, we're in good shape.
Yep.
But some of the private groups have said not so much. I guess it remains to be seen. Interestingly enough, Russian wheat export pricing, which is essentially global wheat export pricing because they're the kind of low price setter and the biggest exporter, it's held up fairly well through this tariff stuff, despite the big sell-off on the Chicago Board of Trade. So they're not necessarily the same thing right now.
The U.S. dollar fell to a 3-month low on Wednesday amid rising tariff concerns. The dollar dropped 1% on the Bloomberg Dollar Spot Index, marking its biggest decline since President Trump took office. Nearly all 10 global currencies included in the index advanced against the dollar. The dollar has been trending lower this week after Trump imposed tariffs on Mexico and Canada. The move has raised concerns that a potential global trade war could slow economic growth and prompt major central banks to further reduce interest rates. Deutsche Bank has suggested that the dollar may be losing its status as a safe haven currency due to global political changes.
This is a pretty big breakdown in the dollar index. And if you're a fund trader, I guess the tariffs are more important. The supply and demand or fear aspect is more important because typically when the dollar moves lower, that's friendly commodities. And that's not the sort of reaction that we've seen. I also pulled the Brazilian currency. The dollar's been weak versus Brazil. It's lost 9.3% from the high that was posted in December. This should be positive news for the corn and soybean markets. This will make U.S. corn, U.S. soybeans more competitive versus Brazil. Now, make no mistake, Brazil is going to be cheaper than us with soybeans for a while, but could keep U.S. corn competitive on the export market just a little bit longer.
U.S. ethanol stocks remain near historically high levels last week. The stocks number of 27.3 million barrels was down 1% on the week, but up 4.8% versus the same week last year. Stocks were comparable to levels observed during the initial stages of COVID. Weekly ethanol output of 1.09 million barrels per day was up 1.1% week over week and up 3.4% compared to the same week last year. Implied gasoline demand was up 5% for the week, but down 1.5% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 1% compared to the same period last year.
Stocks numbers are still scary high. Despite that, we're producing a lot of ethanol and margins have improved because of the decline in corn prices. Margins, when you take a look at spot prices of corn, ethanol, DDGs, inputs, you're talking break even to positive, maybe 20 cents a gallon, depending on the plant. And plants will vary, of course. What did cattle do yesterday?
Cattle futures bounced back. Live cattle were $122 to $280 higher. Feeders saw gains ranging from $225 to $407. Box beef prices softened. Choice was down $133 at $313.54, and Select was down $149 at $302.53.
Outside markets, U.S. dollars off a little bit. The stocks are down sharply, as I mentioned. The S&P is down 61. The Dow's down almost 400, giving back, I think, just about everything that was gained yesterday afternoon on those tariff headlines. Gold's down $15. Crude oil's up 50 cents. I apologize for being late today, guys. This will haunt me in my dreams for years to come. Have a great day. We'll be back on Friday.